Hey there, my wonderful viewers. Welcome back to the channel. If you're new here, I'm so glad you found us. We're all about helping you navigate your financial future with confidence. Now, I've got some potentially exciting news to share with you today. You might have heard whispers about a possible IRS refund wave coming, and some folks are wondering, could this somehow mean an extra $4,500 in Social Security benefits for seniors? I know, it sounds almost too good to be true, right? Well, let's dive deep into this together and separate the facts from the fiction, because when it comes to your hard-earned money and benefits, you deserve the complete truth. So grab your favorite cup of coffee, get comfortable, and let's talk about what's really happening with the IRS, Social Security, and your potential benefits. Let me start by being completely transparent with you. There's been a lot of buzz online about this $4,500 Social Security boost connected to IRS refunds. But here's what's actually going on, and it's important we get this right. First, let's talk about the IRS refund situation. The IRS has indeed been processing a significant number of amended returns and delayed refunds from previous tax years. According to the latest data from the Treasury Department, there are still millions of Americans waiting for refunds totaling over $1.5 billion. That's real money sitting in government accounts that belongs to taxpayers like you and me. Now here's where things get interesting and where some confusion has crept in. Some of these delayed refunds do involve seniors who may have made errors on their tax returns related to Social Security benefits. You see, many seniors don't realize that depending on your total income, a portion of your Social Security benefits might be taxable. Let me give you a real example. Meet Dorothy. She's 68 years old and receives $2,200 per month in Social Security benefits. Last year, she also had some part-time work income and withdrew money from her retirement account. When she filed her taxes, she forgot to properly calculate the taxable portion of her Social Security benefits. This mistake meant she overpaid her taxes by about $1,200. Dorothy's story isn't unique. The AARP estimates that roughly 40% of Social Security recipients pay taxes on their benefits, but many don't calculate this correctly. When these seniors file amended returns or when the IRS catches these errors, it can result in refunds ranging from a few $100s to several thousand. But, and this is crucial, these aren't extra Social Security payments, they're tax refunds. Your actual Social Security benefit amount doesn't change. The $4,500 figure that's been floating around appears to be an estimate of the maximum potential tax refund some seniors might receive, not an additional Social Security payment. Let me break down the numbers for you. According to the Social Security Administration, the average monthly Social Security benefit for retired workers in 2024 is about $1,907. Over a year, that's roughly $22,884. If someone overpaid taxes on their Social Security benefits by a significant amount, say 15% to 20% of their annual benefits, yes, they could potentially see a refund in the $3,000 to $4,500 range. The IRS has confirmed they're working through a backlog of these types of corrections. A spokesperson from the IRS recently stated that they're processing approximately 2.1 million amended returns specifically related to retirement income calculations, including Social Security benefit taxation errors. Here's what makes this situation even more complex. The Social Security Administration and the IRS don't always communicate seamlessly about benefit amounts and tax withholdings. Sometimes, seniors have taxes withheld from their Social Security payments based on outdated information, leading to overpayments that only get discovered later. I want to share another example with you. Robert, age 72, had been having federal taxes withheld from his Social Security benefits for 3 years, but his total income had actually decreased after he stopped working part-time. He was having too much tax withheld, but didn't realize it until his tax preparer caught the error. Robert ended up receiving a $2,800 refund, money that was rightfully his all along. The key thing to understand is this. If you're getting a refund related to Social Security benefits, it's because you paid too much in taxes, not because Social Security is giving you extra money. Your monthly Social Security check stays the same. Now, there is one legitimate way that Social Security amounts can increase, and that's through the Annual Cost of Living Adjustment, or COLA. For 2024, Social Security recipients saw a 3.2% increase in their benefits. The 2025 COLA will be announced in October, and early estimates suggest it might be around 2.5% to 3%. But again, this is separate from any IRS refund situation. Now, I'm really curious about your experiences. Have any of you received an unexpected tax refund recently that was related to your Social Security benefits? Or maybe you're wondering if you might have overpaid taxes on your Social Security in the past. Drop a comment below and let me know. I read every single comment, and your experiences help other viewers understand these complex topics better. Plus, if you have specific questions about your situation, I might be able to address them in a future video. All right, let's get practical. Whether or not you're expecting a refund, here are some important steps you should take to make sure you're handling your Social Security and taxes correctly. First, review your most recent tax return. Look specifically at how your Social Security benefits were treated. If you're married and your combined income is over $32,000, or if you're single with income over $25,000, some of your Social Security benefits are likely taxable. The exact amount depends on a complex calculation, but it's worth double-checking. Here's a simple way to think about it. Add up half of your Social Security benefits plus all your other income. If that total is above those thresholds I mentioned, you probably owe taxes on part of your Social Security. If you didn't account for this properly, you might be owed a refund. Second, consider having taxes withheld from your Social Security benefits if you consistently owe money at tax time. You can request this by filing Form W-4V with the Social Security Administration. You can choose to have 7%, 10%, 12%, or 22% of your benefits withheld for federal taxes. This prevents big tax bills at the end of the year. Third, if you think you made an error on your tax return from the past 3 years, you can file Form 1040-X to amend your return. Don't wait. You generally have 3 years from the original filing date to claim a refund. Here's something many people don't know. If you're required to pay taxes on your Social Security benefits, those taxes actually help fund Social Security and Medicare. So in a way, you're contributing to the programs that support you and future retirees. Let me also address timing, because I know many of you are wondering when you might see any refunds. The IRS typically processes amended returns within 16 weeks, but they're currently dealing with that backlog I mentioned earlier. If you're expecting a refund, be patient, but also keep track of your filing. You can check the status of your amended return using the IRS's Where's My Amended Return tool on their website. Now, let's talk about 2024 tax planning. If you received Social Security benefits this year and also had other income, maybe from a job, retirement account withdrawals, or investment earnings, start planning now for next year's tax filing. Consider making quarterly estimated tax payments if you expect to owe money. This prevents penalties and spreads out your tax burden throughout the year. For those of you who are still working while receiving Social Security, pay special attention to your total income. There's something called the earnings test that can temporarily reduce your Social Security benefits if you earn too much before your full retirement age. For 2024, if you're under full retirement age, Social Security will deduct $1 from your benefits for every $2 you earn above $22,320. Here's a pro tip. Keep excellent records of all your income sources, including your Social Security statements, tax documents, and any correspondence from the IRS. This makes tax preparation much easier and helps you catch any errors quickly. Also, if you're helping elderly parents or relatives with their finances, make sure they understand how Social Security taxation works. Many seniors are surprised to learn their benefits might be taxable, especially if they have pensions or continue working part-time. One more important point: be very careful about who prepares your taxes. Make sure your tax preparer understands Social Security benefit taxation. Some preparers, unfortunately, make errors in this area because the rules can be complex. If you prepare your own taxes using software, double-check that the software is correctly calculating the taxable portion of your Social Security benefits. Looking forward, there are a few things to keep in mind. The IRS continues to modernize their systems and improve communication with the Social Security Administration. This should reduce errors and processing delays over time. Also, Social Security taxation rules haven't changed in many years, but there's always discussion in Congress about potential modifications. Some lawmakers have proposed eliminating taxes on Social Security benefits entirely, while others suggest raising the income thresholds. Keep an eye on these developments, as they could significantly impact your tax situation in future years. For 2025, the income thresholds for Social Security benefit taxation will likely remain the same: $25,000 for individuals and $32,000 for married couples filing jointly. These amounts aren't adjusted for inflation, which means more Social Security recipients become subject to taxation over time as their other income sources grow. Well, my friends, I hope this clears up some of the confusion around the IRS refund situation and Social Security benefits. Remember, while you might be entitled to a tax refund if you overpaid, this isn't the same as getting extra Social Security money. Your monthly Social Security benefits are calculated based on your work history and don't change because of tax refunds. The most important thing is to stay informed and make sure you're handling your taxes correctly. Don't let fear or confusion keep you from claiming money that's rightfully yours, but also don't get your hopes up based on misleading headlines. If this video helped clarify things for you, I'd really appreciate it if you could give it a thumbs up. It helps more people find this information, and honestly, it just makes my day to know I've helped someone navigate these confusing financial topics. And if you haven't already, please consider subscribing to the channel and hitting that notification bell. I post new videos every week covering Social Security updates, retirement planning tips, and other financial topics that matter to you. Your subscription really helps me continue creating content that serves our community. Got questions about your specific situation? While I can't provide individual tax or financial advice, I do read all the comments and often create videos based on the questions you ask. So don't be shy, share your thoughts and questions below. Until next time, take care of yourselves and your finances. Remember, knowledge is power, especially when it comes to your money and benefits. I'll see you in the next video.